Well, aloha everyone. Joshua Hayes at bigwavetrading.com. If you did not watch my video lesson or read my commentary that I posted following Tuesday's session, I suggest you go back and reread it or rewatch or watch or read it so you understand why today happened and why the odds of us testing the 200-day moving average and the February lows on the NASDAQ is extremely high now. The NASDAQ suffered another clear distribution day, another reversal intraday, closing at the lows of the day. So it's pretty clear cut. New York Stock Exchange did the same thing, reversing a key resistance and the 50-day moving average. S&P 500, exact same similar situation, right back below its 50-day moving average. The Dow Jones Industrial Average, same thing, heavier volume, right back below its 50-day moving average. And the Russell 2000 is shown by the IWM here, since Telechart doesn't have the other index. Nasty reversal right at the 50-day moving average. 50-day moving average is now downtrending. Look at all of these indexes. The 50-day moving average is about to roll over and is rolling over on all of them. Only the NASDAQ remains above the 50-day moving average. All of my models are under a hard neutral condition. They're not sell yet, but I tell you what, it won't take much selling to throw these into sell signals. Now, the good news today is that my personal long positions, they actually held up relatively well, but I did have quite a few sell signals. NEPT, confirmation close, rollover below the 50-day moving average. That's a full sell signal. LYTS, immediate failure. This is why I kept everything small. FL, confirmation close below the 50-day moving average, back-to-back distribution days. That's a full sell signal. WTT is finally an end-of-day full sell signal, already been knocked out. SRI, complete rollover full sell signal. ESE, massive failure sell signal. AGN, bounce attempt, failed sell signal. ESND, bounce attempt, failed sell signal. And that's about the worst of them all, HIFS, because these positions are already oversold. They're bouncing on heavy accumulation, yet they fail. AGN, ESND, that's a pretty big red flag that when oversold stocks at support with accumulation continue to sell off, that the market is seriously sick. Now, I want to run through my short scan, but before I do, I did receive one legit hedge signal, SOXS. I was long this stock, but whenever it went below these recent lows, I was knocked all out. Candle over candle on above average heavier volume. This stock showed up in my ETF scan and price volume BOP scan, this ETF, leverage ETF. So I want to buy it back 2% of my account capital plus 2.5%, whatever it gets to, whatever I decide. I'm going to try to get like round numbers. So like if it ends up like being 106 shares, I'll be moving it up to like 110 shares, or 121 shares. It'll be moved up to 130. No matter what, wherever I lay, I'm going to have an even amount of shares by the time I accumulate whatever I want to accumulate in the morning, if my hedge gets filled. Hopefully, same situation as this morning. We gap higher in the morning. That's what I'm hoping for. The market gaps higher. I'll get my hedges filled. My long positions that I'm still long will gap up above the raised stops. And if those stops fail, I'll be leaving with tiny losses, small losses, gains, small gains, tiny gains, or large gains. There will be no medium-sized, large losses. Now, the bad thing here was, like I just showed you with all those sell signals and the 50% sell signals that you'll see, it's starting to become a death by a trillion cuts. But my hedges are helping. I have a heavy cash position, and I have a lot of tight stops. So, you know, I'm more than welcome. I welcome a market pullback here, a retest of the February lows. The charts are ugly, and with that in mind, really quick, sorry, jump ships here. SOXX, my limit order is going to be 1176, today's high day. My cut loss is 1085, but if I get long, let's say 100 shares, I'm only going to have 50 shares at 1085, and then once again, I'm doing the half, till I have one share left, and then I'll be all out of SOXS since this signal's coming from the 52-week lows. Now, somebody, is there's a few bulls and stock twits that constantly message me. They're trying to fight me short term, kind of how I know that we're at a serious trend change possibly. But there's also a member of the chat room that constantly is talking bullish about stocks right now, and he always brings up stocks that are doing well, and that's fair enough. But remember, these few stocks that you see that I'm going through right now, my daily volume surge scan, these are all gapping up because they're earnings winners. A few earnings winners that you're seeing here, and we're already running out of them. So we already ran out of them. So I started here with ECYT, but all these few stocks moving up is not a market. So just these few here, ECYT, if you want to use Etsy, Vive, TPC, HLF, you know, those stocks did great. But now let me show you this scan here. This is my main short scan right here. It's got 136 stocks in it. Before I go through them, is MHO even in it? Yes, MHO is in it. Here's another stock that as it's sold off, there's somebody that's been telling me, he asked me what I thought of this stock, and I told him I wouldn't touch it with free money until it shows signs of bouncing. He said I was crazy because he would draw a trend line here, a GAN fan here, a GAN fan there, a trend line here. And it just, you know, kept failing. And then when it started to curl here, he started sending me messages saying, I told you so. Well, he was beginning his buying up here, so I guess I told you so came a little late, but now look at what's happening. I know how to read charts, folks. I may not be the greatest trader out there. I may not be able to turn 50,000 into 1 million in a year like some of the day traders and some of the very leverage, push it, balls of the wall traders that I do know out there that are consistently profitable. But one thing I do know is that I know my charts really well. And I know when the market's healthy and when it's not. And really quick, to end this video lesson, I want to go through all 136 stocks in the scan. I'm not going to name them by name. You can read the names as I go through them here. You can look at the ticker symbols here. But just look at this hard right edge, this area here on all of them. Look at these price patterns. You're starting to see now, as we're starting to get now into the ones that are down almost 1%, same similar situation. A lot of red bop, a lot of distribution, and a lot of wild, choppy price action. And it's not just in a few stocks. It's in a lot. And as I start to get through this scan, it's about all you're going to notice. So I'm going to start slowing it down just a little bit now. So as we go through each one, look at these patterns. These are patterns that I have not seen in the market since this rally started following Brexit election back in 2016, and actually since the lows in 2016. This is the first time I've seen this many stocks with this poor of price patterns. Now remember those few stocks gapping up that are doing well, the quote new leaders? They can't even hold a candle to the amount of big cap stocks that are rolling over and look nasty. Look at these things. You want to buy any of these patterns? These are patterns that are as absolutely falling knife, waterfall, do not touch patterns. Look at all of them. I'm still going. We're getting near the end of the scan, but look at all of this. It's the same chart patterns over and over and over. Wide, loose, volatile, gappy, and absolutely puking patterns. Now, the few stocks that are holding up, they remain in the one and only NASDAQ 100. Very similar situation to 2018 is starting to look a lot like March of 2000. Apple, doesn't mean it's going to happen. Trust me, you could have a big, huge reversal day tomorrow. 2% up across the board on all the indexes on huge volume. Big reversals in lots of big cap stocks and small cap stocks. And in 1-2 weeks, enough basis might form out there that I can get long a lot of nice looking chart patterns. But as of this moment, the only moment that exists, the only moment that we have to make money, these are not good patterns. Microsoft V-shaped up back into recent highs, rolling over now on heavier volume. Apple is doing the same thing. WDC, look at this big, ugly, giant, wet, just ugly. Tesla, ugly. I look at all the red in this chart. How can you be bullish on this chart short term? I just don't understand it. I know a few people that are. I don't get it. Google, I don't get it. How are you bullish here? SSYS, how are you bullish here? I don't know. Priceline. Oh, did they change their symbol to like booking.com maybe or whatever? Whatever, it doesn't matter to me. But the bottom line is, let's look at Intel. Intel, look at this wide and loose diamond pattern forming. There's the top of the diamond moving like this. Here's the bottom of the diamond pattern. Megaphone pattern is what this is. It can then consolidate to diamond pattern. But megaphones turn into diamond patterns, turn into waterfall patterns. So a lot of ugly charts out there. There is no reason whatsoever to be bullish short term. If you're bullish short term, you are biased. You got to look at yourself in the mirror and ask yourself, why am I bullish here? Everything suggests and tells me not to be. Interest rate hikes are rising. They're going to invert the yield curve, the Fed is, within the next year to two. So, and news is as good as it can be. Earnings are as good as it can be. Stock inflows are as high as they've ever been. Who do you think the big smart money is selling to right now? I mean, if the smart money's not buying and the retail public's buying, who is the retail public buying from? So just keep that in mind. Unless we see a big, huge market reversal in the next day or two, odds are we have more downside. Don't get caught in the bull camp. If I had more charts that look like MHH, looked like SYRX, BGCP. I'm really stretching for good charts here too. Twitter, MOXC, maybe, maybe I could get it, but those patterns I showed you aren't that nice, and those are the few nice chart patterns out there. So if you're bullish here, you're biased. Gonna need a lot of work in the market to fix that. Caution is advised, caveat emptor, cash is king. Aloha.